Professor Roubini, thrilled to have you back with us. Again, this is not in the textbooks. What book is Draghi? What book is Yellen? What book are the elite here? What are they reading from?
Well, it is not in the books because 6 years after the crisis, we've tried zero policy rate, we've done quantitative easing, we've done credit easing, we've done forward guidance, we've even done negative deposit rates and interest rates in nominal terms, we've done unlimited, unsterilized forex intervention, and now last week, the 10-year treasury yields in Switzerland, 10-year maturity were negative. Which kind of world is that? Now, the gold bugs were saying that this is going to lead to a collapse of the dollar, hyperinflation, and gold going through. They got it totally wrong because the gold is down, the dollar is up, and we have a problem with lack of inflation, of deflation, because in spite of this monetary stimulus, in my view, it was not enough of a fiscal stimulus, and therefore output is still below trend.
I spoke with Adam Posen today at the Peterson Institute. He's looking for bold moves on deflation. Would you suggest that Mr. Draghi will be bold tomorrow?
Master Draghi wants to be bold. He has to convince a majority of the council to surprise on the upside. The trouble is to have a larger program in terms of sovereign bond purchases. The hawks are going to say, let's have less resharing and have more of the national central bank buying those bonds. And if he accepts less resharing, then it's not going to be as effective.
I'm going to suggest 90% of the people in this valley and all of our viewers don't have the sophistication you have on this. When you say there's a negative 5-year rate in Japan, when there's a negative 10-year rate in Switzerland, we all understand that's not normal. Is that urgency there among elites in economics?
Well, they've been trying. They've tried to do everything possible in order to try to avoid deflation. The problem is that we need not just the right monetary policy, and have supported unconventional monetary policy, but QE worked in the United States because he had backloaded fiscal consolidation, while they've been front-loaded in the case of the Eurozone, and structural reform have to occur in Japan and the Eurozone, even the United States. So you have to have a combination of policy, and they've not done the right thing.
You were claimed for QE1, QE2, QE3. I put up the chart of Fed assets, and we're still growing our assets. Which QE are we on right now?
Well, we finished QE3, and so far the Fed is saying that as the economy recover at some point in the middle of the year.
Do you buy that? Do you buy that? Or are you with Vincent Reinhardt, formerly with Morgan Stanley, that they're going to pull it out?
If the rest of the world surprises on the downside, and if the dollar sharply appreciates further, at some point the U.S. is not going to be able to decouple from what's happening in the rest of the world. Economic growth could slow down, we could go into deflation, and in that case they could postpone the start of the hike, or they could start hiking and then revert themselves, or in a very extreme scenario, they could go back to quantitative easing. It's not my baseline scenario, but there is a risk.
You look good in your Bloomberg Business Week coat.
It's beautiful.
Your Bloomberg Business coat. I like it a lot. The currency is the thing here, folks. We're all linked here to currencies when we travel or when we're in the United States. Are we in a currency war? And when does the dollar become the Rubin strong dollar? We're not there yet, are we?
Not yet, but what's happened is domestic demand is weak because of deleveraging, so everybody wants to have stronger growth with more net export. That means a weaker currency. That means more unconventional policy.
That's a currency war.
It is, and the latest run was started by Japan. After Japan did additional QQE, other central banks in Asia, from China to Thailand to Korea, Taiwan, and others have done so. And now there is another run that's going to start in Europe with the ECB, the Riksbank, the SMB, the Norges Bank, and everybody else. But you are in a world in which not everybody can have a weaker currency. If my currency is weaker, somebody else is stronger. If my trade balance is better, somebody else has to be weaker. So it's a zero-sum game in currencies. It's a zero-sum game in trade balance. And so there is a currency war.
I want to switch here to America. We're going to talk about that in the next section after the President's State of the Union. But a couple nights ago, I was in Zurich, and I stood outside the Swiss National Bank late at night after a beverage of my choice, which I needed after what they did this week. Nouriel Roubini on the effects of what the Swiss National Bank did. Does it affect, is it a butterfly flapping that they're going to feel in Peoria, Illinois?
Maybe not in Peoria, Illinois, but many other central banks were now trying to avoid deflation by going to a peg and unlimited intervention on the FX rate. The Danish have done it, the Czech were doing it, Israel and Sweden were starting to think along those lines. And what has happened with SMB signals that even that last line of defense against deflation may fail. And if it's going to fail, then what's going to be anchor for inflation expectation in Switzerland, in emerging markets, in advanced economies? Therefore, there is a global impact.
Was Jeff Sachs a tough teacher?
He was a great teacher.
There is this intractable issue. The president addressed it. Republicans address it. America's inequality. First of all, is it a legitimate topic, or has it always been there? It's just something visible now.
Well, inequality is worsening in many advanced economies, and especially in the United States. You have to ask yourself why. I think it's because technological innovation is capital intensive and labor saving, because trade and globalization reduces the income and jobs of those who have low skills or are partially skilled, because we have these winner-take-all effects of the superstar that in any profession get the benefits of a market of billions, because the economic and political power of financial economic elite is greater than otherwise. There are lots of factors that are driving it, and it's leading first to social political instability, but it also negatively affects economic growth, because you are redistributing the income from those who spend more to those who save more. So over time, the fall in the share of labor income is going to have a negative impact on economic growth and aggregate demand.
That sounded like Roubini 302 down at New York University, something like that. That was a great clinic. What the audience wants to know is how bad is the plutocracy right now? I mean, within the economics and the theory and all that, there's a behavioral construct here of elites like in this valley. How big is the plutocracy effect in 2015?
Well, it's significant because we're in a democracy where it supposedly has to be one man and one vote, but the reality is those who are billionaires, those who have economic and financial power, can affect legislation on taxation of capital gains, of carried interest, by having that political power. In the U.S., we have a system of legalized corruption, if you think about it. K Street and the lobbying affect legislation with the money they give the politician. And therefore, those who have financial resources have a greater impact on the political system than those who have less. So it's not a true democracy.
What is your policy prescription for Republicans dominant on the Hill? Who knows who will be in the seat in 2016? You've been in the White House with the intractable politics of this American nation. What's the prescription?
Well, last night, President Obama correctly said we should tax slightly more the top 1% and the financial institution.
Republicans didn't applaud. Republicans didn't applaud.
They didn't applaud, and they're not going to vote for it. Now they control the Senate in addition to the House. But the problem is going to be that even among Republicans, the middle class and the working class who votes for Republicans, they're worried about the rising inequality. And therefore, their chances of winning 2016 are going to be affected. Romney lost in part last time around because he made the remarks about the 47%. If that's going to be the attitude of the GOP, it's not going to be good for them in 2016.
Within that chart, and it's the iconic chart from 2 years ago, chart of the year, which is median household income adjusted for inflation. We all know we've gone nowhere in, let's call it, 2 decades. Is it a technological solution? Ned Phelps is here, the Columbia University Nobel laureate. He's waiting for a new technology. Do you see it out there?
Technology actually makes things worse because we were losing manufacturing jobs and we created service jobs, but now services are becoming tradable, and therefore those service jobs are going to emerging markets. Today, a radiologist in Mumbai can do the same job as a radiologist in New York for 1/4 of the salary, but tomorrow there's going to be a piece of software that's going to replace radiology in New York and in Mumbai. So initially is offshoring of these service jobs and manufacturing to Asia and emerging markets, but eventually technology is going to replace these jobs altogether. In transportation, education, in healthcare, in retail, in lots of services. So we are facing a long-term problem.
Daniel Yergin here. We'll speak to him in our 3 days of coverage here in Davos on oil. Nouriel Roubini right now on the first and second order effects of oil. We all know it's good at the gas pump, but there's another story, isn't there, on oil?
Well, there are distributional effects. Exporters lose, importers of oil win. Within countries that produce oil like US and China, producers lose and consumers are gaining. But the net impact for the global economy in the US is still positive because the increase in disposable income and consumption is going to be greater than the fall in output, employment, and capital spending in the energy sector. So it's still a net positive.
To wrap this up quickly, you and I sat in that bar at the Belvedere Hotel years ago talking about the crisis to come. Is the crisis over?
It's not over. Look at around the world. The Eurozone is in deflation and in recession. Japan is going back to recession.
Deflation.
It's not. It's not driven by technology or oil. It's driven by lack of aggregate demand. In the U.S., you can make the story that technological innovation and oil prices are leading to some degree of good deflation, but certainly that's not the story for Japan, for the Eurozone, and many other parts of the world. It's a lack of aggregate demand, and it's that deflation is going to make the debt problems even worse.
Nouriel Roubini, thank you so much. Wonderful to have you here.